Hello, welcome to European Open Briefing for Wednesday, August the 1st. I'm Rafi Bayajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. We've got a very strong US dollar this morning. Dollar yen has broken past the 112 level. This comes after the Bank of Japan's decision yesterday, where they made some tweaks to their policy, but signaled that they will maintain on a path of ultra-loose monetary policy for some time yet. We also had a batch of very strong US data, so all of that boosted the greenback. Risk sentiment, though, has deteriorated this morning. Yesterday we got a boost in risk appetite on reports that the US and China are seeking to resume trade talks, but now we're hearing reports that the US is threatening to increase the tariffs on that 200 billion of Chinese imports from 10% to 25%. We can see most Asian indices ended the day lower, particularly in China. The CSI 300 down by 2%. Japan was the exception, as the Nikkei was boosted by a weaker yen. We also had a string of weak manufacturing PMIs out of Asia this morning, and all of that is weighing on the Aussie and the Kiwi. We can see both pairs are down by 0.3% versus the US dollar. We also have been having some poor data out of both Australia and New Zealand this week as well. If you look at the Canadian dollar, it's marginally lower, but we did see the loonie surging yesterday, hitting a 7-week high after the monthly GDP numbers out of Canada beat expectations. So GDP in May rose by 0.5%, though the gains for the loonie were somewhat held back by uncertainty regarding the NAFTA talks. Although we've been hearing progress between the US and Mexico, Canada hasn't been making much progress in those talks, so there's quite a bit of uncertainty there. If you look at oil prices, they are down sharply. We did see a big rise in US crude inventories yesterday from the API report. The official EIA report is due later today, and if that also shows a big build in US stocks, we could see further declines in oil prices. And if you look at European currencies, sterling is slightly down against the US dollar ahead of the Bank of England meeting tomorrow, where a rate hike is expected. The euro is also slightly weaker. We had mixed Eurozone data yesterday, plus the stronger dollar, so that's weighing on both the euro and the pound. Looking at the major movers this morning, we can see the yen continues to extend its losses, down by both against the euro and the yen. The dollar index marginally higher, but at the bottom of the table we've got Aussie, the Kiwi, and oil prices. Looking now more closely at the dollar-yen pair, we can see the pair breaking past the 112 level for the first time in 1.5 weeks. We had a string of positive data out of the US yesterday. Personal income and consumption grew solidly in June, coming in line with expectations. Personal spending saw a big upward revision in the prior months. Core PC inflation did fall slightly below forecasts at 1.9%, though there were upward revisions in the prior months on that too. So overall, it was a very positive PCE report. We also had the Chicago PMI and the Conference Board's Consumer Confidence Index, both of which also beat expectations. And this comes ahead of that FOMC decision later on today. The Fed is expected to hold its policy unchanged, and we're unlikely to see much change to the statement, given that we don't have a press conference today nor updated economic forecasts. A quick look now at the Australian and New Zealand dollars. We can see both currencies had been making decent gains early in the week. The Aussie actually rose for the past 3 sessions before dropping to around the 0.74 level. We had a drop in Australian manufacturing PMI in July. China released a cash-in PMI report as well, which, like the official PMI, came in below expectations. And in Japan also, the PMI there fell in July, though the final reading in Japan was revised up from the preliminary estimate. We also had data out of New Zealand. The unemployment rate in the country rose to 4.5% unexpectedly from versus expectations. It would stay at 4.4%. So this was for the second quarter. Overall jobs growth, though, during the quarter wasn't too bad. Despite that, we're seeing the Kiwi slipping this morning on that negative risk of sentiment as there are growing concerns about an escalation in trade tensions between the US and China after the US threatened to raise the tariffs on the planned 200 billion on Chinese imports from 10% to 25%, though there's still some hopes that the two sides would be able to resume trade talks soon. And a quick look at the euro-dollar pair. Yesterday we saw the pair topping at 1.1745 on the back of the slide in the US dollar, as well as initially we saw the euro rising on the release of the flash estimates for inflation for July, which came in at 2.1%, beating forecast of 2%, but the GDP numbers disappointed. We saw Eurozone economy growing by just 0.3% in the second quarter. This was slower than even in the first quarter, where we had a growth of 0.4%. So there was no rebound in the second quarter in the Eurozone economy. Despite that, the data is not likely to make much change to the European Central Bank's outlook. The euro is, apart from the data, is also being pressured by, of course, the stronger US dollar. It's currently trading around 1.1686. And finally, looking at the rest of the day, we're going to have a UK manufacturing PMI coming up shortly, and the ISM manufacturing PMI is due out of the US, plus, of course, the Fed decision at 18 hours GMT. That's it from me. Thank you very much for watching, and have a great day.